Tuesday delivered the rebound that artificial intelligence bulls needed, but not yet the confirmation they wanted. Semiconductors and momentum surged, ending the broad market's three-day losing streak. SPY and QQQ still traded below normal volume, while Brent crude closed above $91 and the 10-year Treasury yield reached a two-month high. The one-line conclusion is this: the AI trade is alive, but Wednesday's Alphabet, Tesla, and IBM results must convert a sharp rebound into durable leadership. All four major indexes advanced. The S&P 500 closed at 7,507.89, up 0.87%. The Nasdaq Composite finished at 25,829.14, up 1.26%. The Dow closed at 52,212.40, up 0.72%. The Russell 2000 ended at 2,981.06, up 1.31%. Small caps participated, but the Nasdaq's leadership and the semiconductor surge show that technology remained the day's primary engine. The ETF scorecard separates price strength from conviction. SPY closed at $748.32, up 0.84% on 26.91 million shares. QQQ closed at $708.97, up 1.85% on 30.24 million shares. SPMO closed at $149.71, up 3.59% on 3.06 million shares. Volume reached 51% of normal in SPY, 70% in QQQ, and 138% in SPMO. Momentum showed genuine participation. The broad index rebound was less convincing. The rally was powerful, but it was still concentrated. The Philadelphia Semiconductor Index gained about 5.5%, its second consecutive rebound after entering a bear market last week. The S&P 500 gained 0.87%, yet only about 245 index members advanced. The Equal Weight Fund gained only about 0.2%. That gap shows that large technology and chip companies carried the headline indexes. Concentration is not automatically bearish. It means Wednesday's earnings have unusually large index consequences because the strongest weights must justify the rebound. Volatility declined as equities rebounded. VIX finished near 17, down about 9%. That confirms lower demand for immediate protection, but it does not reveal dealer gamma. A reliable public end-of-day model with a timestamp was not available at the production cutoff. Net gamma, the gamma flip, the call wall, and the put wall are therefore unconfirmed and omitted. These levels are third-party estimates derived from options data, not exchange official figures. Price and verified session ranges remain the working framework. Four stocks show both sides of Tuesday's tape. MU closed at $970.82, up 12.17%. It traded 51.94 million shares, near its normal volume, as fear of missing out returned to memory stocks. The next test is holding 950 and clearing 982. 3M closed at $170.77, up 7.33% after a beat-and-raise quarter. Volume reached 259% of normal. GM closed at $79.51, up 4.89%, as revenue grew for the first time in more than a year. Danaher closed at $179.14, down 10.92% after a weaker revenue growth outlook. Volume reached 533% of normal. Sector leadership was clear. The Semiconductor Fund, SOXX, closed at $552.69, up 5.45%. Memory and artificial intelligence infrastructure names led the move. The Energy Fund, XLE, closed at $58.51, up 0.98%. Oil reached a 5-week high as Middle East supply risk increased. The Consumer Staples Fund, XLP, closed at $84.05, down 0.95%. Defensive demand faded as traders returned to high-beta technology. Tuesday's rebound advanced against a difficult cross-asset background. West Texas Intermediate crude settled at $84.91, a 5-week high. Brent settled at $91.01, above $90 for the first time since early June. The 10-year Treasury yield reached about 4.64%, its highest level in 2 months. Higher oil raises inflation risk, while higher yields increase the discount rate for long-duration technology earnings. The fact that chips rallied anyway shows strong risk appetite. It also raises the standard that earnings must meet. Wednesday has no major scheduled United States macro report. That puts earnings in control of the tape. Alphabet reports after the close. Traders will focus on artificial intelligence revenue, cloud growth, capital spending, and returns on that investment. Tesla also reports after the close. Auto margins, deliveries, pricing, and the robotaxi outlook are the key variables. IBM Tech's second quarter webcast begins at 5 p.m. Eastern. Software growth, consulting demand, and free cash flow will matter. With little macro noise, weak guidance will be difficult to dismiss. Wednesday begins with 5 practical maps. For the S&P 500, support is 7,500, then 7,468. Resistance is 7,515, then 7,540. For SPY, support is 744.18, then 742.09. Resistance is 749.04, then 750. For QQQ, support is 702.80, then 700. Resistance is 710.05, then 715. For SPMO, support is 147.30, then 144.52. Resistance is 150.15, then 153. For SOXX, support is 540.15, then 524.14. Resistance is 555.16, then 560. Turn the rebound into 3 testable views. View 1. The artificial intelligence rebound continues. Validation requires QQQ above 710.05 and SOXX above 555.16. The view fails if QQQ loses 702.80 and SOXX loses 540.15. View 2. Momentum broadens beyond 1 day. Validation requires SPMO above 150.15 and the Russell above 2,981. The view fails if SPMO loses 147.30 with weak breadth. View 3. Oil and yields cap the index. Validation requires crude to hold $84.91, the 10-year near 4.64%, and the S&P to fail at 7,515. The view fails if oil drops below 83. The yield falls below 4.60%, and the S&P closes above 7,515. The closing framework is simple. Tuesday's chip and momentum rebound was real, and SPMO's above-average volume made it more than a quiet bounce. Broad index volume and market breadth were less convincing. Oil above $90 for Brent and a 10-year yield, near 4.64%, keep valuation pressure alive. Wednesday's Alphabet, Tesla, and IBM results decide whether the market is beginning a new leadership advance or merely repairing last week's damage. Trust a close above resistance more than another strong opening print. This review is for market research only and is not investment advice.